I went down, heard through a friend actually that the local Van Shoe store was closing. Um, and so I figured there'd be, at least, go buy a pair of shoes, right? But I went down there, realized everything was 75 off. Made them an offer for an additional percentage off if I bought a whole wall of shoes, which was about 100 pairs. And they called corporate, said yes. And I walked away 100 pairs of shoes. I ended up flipping those on eBay for about triple what I paid. So I had a little bit of money and didn't really find any other opportunities to do with it. So I chose the stock market.
So I did also get involved in the markets through entrepreneurship. So it's kind of interesting for me. I ran what I thought of myself as a conglomerate. So I had the dishwashing business, I had the lawn business, I had the flower watering business, and I was 9, right? So that's how I thought of it, and I started immediately getting into business also. But then I thought about, but this is so much work. And then when I was like 8, I think I read Rich Dad Poor Dad, and I had an interest in business, and I was like, I can invest and I can make my money grow. Went into investing and then got into trading pretty fast. So almost the same. So you found this interesting opportunity, and you only started with $500. So I assume you just did stocks, and was it like a UGMA account where it's a kid's account where you can't do much? Was that how you started?
Right, no, it was actually a Coverdell ESA, so it was actually my college account, which you can't take out unless it's for college expenses until you're after 18.
Yes.
I still currently have that account open, but most of my funds are
okay.
in a margin account at the moment.
Yeah, I have actually the same thing. Most of my funds are in a margin account. After a little while, though, my parents did give me some money, of course, because I proved myself. I proved myself. I had decent returns on what I was getting in an account, but so you funded your own account and you got interested in trading. And how did trading go for you at the beginning? Like, was it really tough because you didn't know much, or what was the?
Yeah, to a large degree, I would join in on some plays that my dad was doing at the time, on a much smaller scale, of course. But I just found it to be kind of inconsistent. With such small capital, I would, basically had to invest 100% of my funds into one stock, so it was very easy to get trapped or, having to wait out a stock if it went the wrong direction on you. Mm-hmm. So it made trading definitely a challenge, to say the least.
And I did get decent returns on my account when I started because I spent a whole lot of time learning the craft, if you will, but considering that, I was learning it, and then I started making money, pretty decent money. The thing is, though, with such a small account, you may make 10% on your account, but what did you make? You made $50. So, again, I started contributing to the account, and for me, I took as many positions as I could with covering positions. So I think I had around $800, $900 in the account, and I think I kept it maybe 4 positions at most, and I held it for a long time because of commissions.
Right, that's similar to what you basically have to hold on a long time scale with that much capital.
Mhm. All right, so definitely makes sense. Just 1 second. Here we go. Okay, so I just need to make a quick adjustment for the viewers here. Okay, so you got interested in the markets and you got interested in trading. All right, so let's just fast forward. You did those trades, but when did you start with options?
About 2 years ago, my grandpa was telling me he actually learned through, because he was a TD Ameritrade subscriber at the time. He told me about Thinkorswim and kind of the whole option setup, and they were offering some free classes that he went and took. And he came back and kind of let me know that about covered calls. as my price, there's still some decent percentages to be made there. And so
Mhm.
I did that for about a year and a half, um, until I kind of got intrigued into a little more of the complex side
Mhm.
of options. You know, the strangles, straddles, spreads, and iron condors, that sort of thing.
Mhm. So going just back to the covered calls. How did you actually do performance wise with the covered stock positions?
It was definitely better than, because before that I kind of just been doing kind of long term to short term like swing trades, and I just found this as a great way to basically enhance my returns because I could squeak out a couple extra percent. You know, if say I owned a stock at $10 and I wanted to sell at 12 anyway, I would always sell the $12 covered call. And if I got called out, no big deal. That was my sell price anyway, and I'm collecting premium along the way. So I actually ended up, increasing my returns through that.
Okay, so I 100% get that. So you talked about getting back into the more complicated side of options, but what exactly got you interested in the more complicated side?
Well, my same thing that got me into options. My grandpa actually told me about Tasty Trade, and before that, I hadn't really, I thought that was way too complex, or you couldn't do it as a retail investor really efficiently until I started watching Tasty Trade, and they really simplified the whole process. And so, I did more online research, kept watching Tasty Trade, and figured out, hey, this is something I could easily get into.
All right. Okay. So you started watching Tasty Trade, so that puts me and you in the same boat. I was a future star on Tasty Trade. You can go watch my watch my interview on YouTube. I'm known as Alex the 12-year-old, as you probably know. But so you got to Tasty Trade through Thinkorswim. What were the Tasty Trade effects on you? So you started trading more spreads, I know that, but how did the spread trading and the probability trading change your trading?
Well, I mean, just the whole concept that Tom and Tony talk about of, basically, semi-randomness in the market and basically just trading probabilities, that really struck home with me because, I like that very mechanical statistical approach because you can replicate that. You can't replicate necessarily, fundamentals or any of that.
Yes.
So, those are just too hard to quantify. But if it's, the way Tasty Trade talks about it, it's all quantified into, basically, and you break it all down into mechanical statistics.
And I'm the same.
That's very tradable for me.
Yes, and I'm definitely the same way. I want to quantify what I'm doing. Like, even before I was trading, it was like, okay, I have this discretionary approach, but I was trying to quantify. And I looked into a lot of historical studies, but some of them were kind of a little iffy for me because, you're looking, when a lot of people so what they take is okay, so they put in a certain amount of information that they feel happened today. So let's say the S&P closed above its moving average. It closed above the 20-day moving average. However, it also gapped up, but during the day it was an inside day for the most part. Didn't move. And then they take it, and then the market went down or went up, whatever it is, 60% of the time over the next 10-day period. They take that as a probability that there's a 60% chance that you will get that probability in the next 10 days, but the actual chance is 52.5%, which is with positive drift. The market is more likely to go up than go down, and 47.5% probability that the market goes up, measured by positive drift, and that's back tested, but it's also true. But your immediate trading statistics would be 50-50, no matter what. So you can't really quantify historical data. I do have some historical studies, but it's just based off market highs and lows and touching a certain high and making me more bullish or bearish or whatever it is. It doesn't really matter what my strategy is exactly because it's more about quantifying it without considering a probability just being how much a historical thing makes money. Would you agree with that?
Oh, absolutely.
So
Yeah, it's just at that point it's just too subjective, really. For me to be confident enough to trade those kind of things, where I'd much rather be trading just options probabilities.
yes, I definitely understand where you're coming from. So guys, we're gonna go on a quick break. I think Josh will be still with us, and we will finish talking about some of his trading in the next segment. We may also go through some trades we are both looking at. Okay, so we'll be back in 1 minute. He is a 19-year-old stock and options trader, trading since he was 11. Started with some different entrepreneurial pursuits, and got interested in managing his own money. So we're talking about probabilities and how we both view probabilities using the tasty trade approach to trading. So Josh, we're talking about historical data and how subjective looking at historical data is. Even if it's quantitative, it's still subjective in a sense. However, there's a lot of firms out there, for example, like Susquehanna, who they're huge and they specialize in options trading. So, when you become bigger, do you think you want to still specialize in options trading, or do you want to get like really big? Like, how big do you want to get, considering, say, a fund that you might run or your trading account?
Like how a size in numbers or
Skill and numbers. Just give it.
Because I know at a certain size, really the option market won't be able to soar while you can throw at it.
No.
But I know at a certain point I would start to maybe diversify into not necessarily other things in the market, because I think the options strategy is the most efficient thing in the market to strategically play on. But if I had the money, I would definitely go into other business pursuits, such as real estate or something to that effect.
Mm-hmm. Okay. So for me, I think, I don't know, like after a while, after running different businesses when I was little, I really prefer trading over any other type of business. even though I really enjoy those other type of businesses and managing a business like Strategic Trading Radio here, which I also manage, not just host. I think I prefer trading over anything. So again, I'll probably end up moving into futures, of course, and you can get really big in those. But say, for example, if you were to have a $500 million fund, you may only need 20% of your account invested in different option strategies, and then you can diversify that and have a portfolio like that, and then you can tie up lots of capital in the futures market. So lots of people say options aren't super scalable, but you can scale them because they're so leveraged that you can tie up a whole lot less capital. And some people may wonder, you're a hedge fund and you're only using 20% of your capital? Yes, but with the leverage, it is worth it. So would you agree with my opinion from that? I'm just wondering.
No, absolutely. And futures, by the way, is something I definitely want to get into once I do build my account up to a certain level.
Like, I investment capital, I probably have more money than the average account involving my own trading. And again, I'm 12, but I will be starting futures in the next couple of months probably, because I really want to really get into options. I do understand futures as a product pretty well. However, the only thing I don't understand as well is Forex. I don't understand Forex, but if you go all over the world, almost all of the traders trade Forex. Are you considering Forex, or are you more unfamiliar about it like I am?
Yeah, Forex is something I haven't really looked a whole lot into. I think futures, from just a trading standpoint, are a little bit simpler to understand, but Forex is definitely something in the future I'd look into.
And then I prefer futures because you can trade corn, soybeans, S&P futures, currency futures, which is almost like FX, except it's the actual currency index. Then you can almost trade every asset with futures versus in Forex, it's just the currency pairs. So, again, the futures market is still really huge. It's probably $2 trillion a day, if I'm correct, in notional value.
Right, and another good point, or another benefit of futures is you can trade it, basically 24 hours a day, 5 days a week.
Yeah, and it's the same with Forex, and FX is even more liquid, but futures are still extremely liquid products.
Right.
And actually, a lot of the, if I take a look, move to my screen, thing about futures is that, for example, if you were to have a counter trend portfolio in options, since we're premium sellers, that often ends up happening, correct?
Right.
Yeah, so what you can do is you can trade the trend with the futures to kind of hedge off an options portfolio and scalp in and out to manage. Like, for example, one of the best, not stock traders I've heard of, not the best, but one of the best. He has lots of positions on this proprietary trader. I'm not going to mention his name. I do not know him personally, so I'm not going to say anything about him. But he constantly scalps in and out of different positions to cover his risk because he's almost always counter trend. So again, futures can just, yeah.
Go ahead.
Okay. Again, just futures can be used. Futures can be used to kind of scalp away some of the losses in the options market if you're stuck in certain positions because of those super low VIX for the year.
Right, and I think that's a great strategy, especially if you have the capital or willing to take the leverage risk with futures. With the scalping, you can constantly reduce your cost basis. Even if the trend is moving against you, you can still stay even with it if you do it in scalping.
And again, I do definitely understand that. All right then. So I think we're going to go, this was a shorter segment than usual, but we'll go on a quick break, and then I think if Josh has time, we will go through some different trades that we're looking at. Alright, we will go on a quick break. Strategic Trading Radio Live. I'm your host, Alex Weisenbach, and I am a 12-year-old stock and options trader. Right now, we have Josh Vanderbilt on. He's a 19-year-old stock and options trader. And this is the segment where we decided we're going to go through some trades that I'm looking at together. So let me just move his interview away, and we'll go through some trades. Alright, so first I'll just go through my market opinions, if you don't mind, Josh. Okay, then. First of all, I just want to show you guys Treasury bonds. Treasury bonds are way down, way down. So, of course, I'm getting small long to sell some interesting premium in here. The IV percentile is pretty high considering the situation, and there may be room for some interesting trades involved. So, Josh, what do you think here on bonds? And then I'll be moving to TLT.
Are you talking TBT right now, or just
TLT right now? I prefer to trade TLT. I have no idea why. I just feel more comfortable with it as a product. It probably will make more sense for the viewers for TBT. So we'll go ahead and switch to TBT. So I'm thinking about shorting TBT.
Actually, bonds are actually something I haven't done a lot of research on. I don't know exactly about the correlation it moves with the market, but you're considering shorting TBT?
Yeah, or selling a put spread in TLT. TLT is a bigger product, by the way, for anybody who isn't trading. And what you can do is you could do a pairs trade where you sell a call spread in TBT, and then you sell a put spread in TLT, and that since TBT is leveraged, you're more short than you are long, or short TBT. So then what ends up happening is that you are long bonds.
Okay.
So I may
so almost an options pair trade.
Almost, yes. It's actually Tom, the founder of Tasty Trade. For you guys who are not what we would consider Tasty Traders, Tasty Trade viewers, Tom likes to do options pairs trades. Now, he does this with naked options. Thing is, naked options are capital intensive. So what I'm going to do is I'm going to beta weight a portfolio. I'm going to beta weight a portfolio against TLT, and then I'm going to get rid of all these different positions we have talked about here on the show. So I'm going to go ahead and I'm going to go to TBT first on the Analyze tab, and I'm going to go to TBT, and just tell me if you agree with the trade or not, and then we'll talk about any stocks that you might have any interest in. So we're going to TBT, and then we're going to sell the 80, 81, 83 call spread, or maybe the 82, 84. So I'm I'm immediately looking at the 82, 84s for the call spread and TBT, and then for TBT we will sell. Do you want to do one strike wide or two strikes wide? In TLT.
For TLT, let me get that look right quick.
So we will be selling a put spread against a call spread in TBT, but we'll be selling this in. No, we will be selling a call spread against the call spread. Sorry, in TLT. So do you want to do one strike or two strikes?
What strikes are you considering for TLT?
For TLT, it'll just be probably the 104, 105 call spread or the 104, 106 call spread. And maybe it may just make more sense to beta weight one and then see if we can mess with it. So, yeah, if you do one strike wide, it kind of looks just like if we were to just a sec. I positions probabilities.
I guess it really all depends on partially on your size.
Oh yes.
You could go either way depending on the size. One strike or two strikes wide.
So selling 82, 84. I'm thinking wide, and then hopefully you can get the stock to pin around between 101 and 105 is kind of where you want it. So it's like a non-directional spread. Otherwise, what you could do is you could sell two TBT call spreads that are two strikes wide to give it a little more risk, which gives it a little bit more risk. So your max loss $123 on that position. Max profit is about $177 if you do it as a pairs options trade. Josh?
Correct. Let me see here. Let me get my screen back up. Right, yeah, I'm seeing that.
Alright, okay, so I'm actually going to mark that on my list as a trade to fill tomorrow. Because all the trades here, by the way, guys, all the trades we talk about here, or not tomorrow, but Monday, all the trades we talk about on the show, I actually do in real life. So, or I will be doing, or have done. Okay, so, yeah, okay, I like that trade. Otherwise, just selling, I already have if I take a look at my positions, my real positions, you won't see it on the screen, guys. If I take a look at my positions, I believe I already have, yeah, I'm already short a put spread in this. The 103, 101, but TLT went down. So all I have to do is sell a corresponding call spread in. I could sell a 1-to-1 put spread in TBT for me, and then do sell another one in TLT, which is what I would probably do.
I think that's a great trade to kind of avert some of your risk.
Yeah, it'll take me more out of equities. Right now I have a lot of gold shorts on, gold stocks, like SLW, which I want to talk about, which I will. New Mount is another one, and then there's GLD. So if that interests you, are there any particular stocks that you may be looking at, or do you just want to go through different stocks that I may be looking at, or ETFs?
The only one I've been really trading recently is the VIX,
Mhm.
UVXY. We can take a look at.
Mhm. Okay. I actually, despite the considering downside drag, we could do. I like the really, really wide iron condor in UVXY with a slight.
Currently, I'm long some stock in this. I've been selling covered calls. I also have a call spread that I rolled about a week ago.
All right. So looking at this, are you, because of the market or some of the stuff you've been trapped in, are you very concentrated?
Yeah, I'm actually very concentrated in UVXY right now. Decided to try to, do a swing trade. It just kept going down. I'm stuck in it, but I've been selling covered calls against it to reduce my cost basis, as well as scalping in and out of it whenever I see an opportunity to keep reducing my average price. And so I'm still bullish on UVXY in the medium term until we get a good fix pop up to at least 18. But until then, I still want to do some quick in and outs, scalping a few percentage points off of my position just to stay active and put myself in a better position, really.
All right, and I also understand that. I get that. So, but would you consider selling a totally non-directional wide iron condor in that stock to add some theta?
Absolutely. I did one a few months back on it.
So
before the markets started really swinging, but
it's okay. So I was just sorry to interrupt, but I was just looking at it, and for your position, you would probably want to do a iron condor with more risk to the upside, considering your position. But for the viewers, I think it would probably be best to do a totally non-directional spread or a slight skew to less risk to the upside.
Right, and I think that would be the correct play to go right now if you don't have a directional bias on the volatility index.
Yeah, so just considering your position, so I'm going to do this since it's easier for me to do. For you guys, I want you to go sell Iron Condor right up here. It seems to be loading on the screen, by the way. For you guys, if you want to sell an Iron Condor, you go sell Iron Condor and do it that way. But I'm going to do it one strike by one strike because it's easier to set up live on the show. Alright, so I have a trade tab open here. And then what I'm going to do is I'm going to change the region that you guys see because I want to widen the view for myself. Alright, so that should be okay. Alright then. I was just doing it for the viewers, but here we go. Let's get rid of this. There we go.
I'm looking at the 50-51 and the 26-25 Iron Condor.
Okay, just a sec. 26-25. Alright, okay, so I'm thinking maybe the 29, 20. Okay, so I'm probably gonna do this 2 strikes wide. So what I'm doing is I'm gonna sell 29s and then I'm going to buy 27 puts and then I'm going to sell 50. I guess we could do the 50. No, those are a little too liquid. Maybe some of these going out are really liquid, so okay, so I'm maybe the 64. Okay, so looking here. Right, what is the deal here? Okay, so I'm selling the put spread, and then it has me selling. Okay, so I think I'm gonna sell the 64s for a 75-cent credit. Max loss is $125, and you want the stock to stay between 28.25, 64.75, with totally no direction at all.
I like that trade.
All right, so I'm actually gonna add that to my list too. C4 66 calls, 29.27 puts, and then
what was your net credit on that, Alex?
75 cents. So your max loss is 125, and your probability of profit is about 6. It's right around 1 standard deviation. And I can show you the viewers in the Analyze tab. So, Analyze duplicate trade, and then actually there's a whole lot less risk. You can't lose money for quite a while if the stock goes up. So it's a little bit skewed to the upside, which is fine because the UVX can pop quickly.
Right.
And the thing is, the stock is trading at 36. And this is a beta weighted portfolio. Let me deal with a single symbol. On a single, it looks pretty good. Not beta weighted. So sorry about that, guys. It's a beta weighted thing. And I'm not really gonna start making it until action. So you're just gonna have to hold on this time wise, and start losing money when it goes to 28, and then 64. And maybe we might want to go in a little closer on the calls and move the puts a little far out because of downside drag. Any opinions on that?
What was that, Alex?
Going a little closer on the calls and then a little farther on the puts because of downside drag. So maybe instead of the 60s, like the 55s or the 50s.
I could see that, because we're going to need a pretty significant VIX pop to get UVXY up to those levels.
So,
but then you never, on the same side, you never know exactly when the VIX will pop. If it's the week of expiration and it stays up there, which it usually doesn't. Usually it pops and then
it usually slows down by expiration. So okay. So how about? And this is going to be a little hard to fill, but because UVXY is wide, it is pretty liquid by itself, but it can get wide. So I'm looking at the 52 calls, 50, and selling the 52s and then buying the 54s. So I'm going to take, and that's going to lower your probability of success for a minute, but then we're going to change. So I'm 52s, and then I am buying 54s. Okay, so that gives you about 85 credit. And then what we're going to do is we're going to take the put side. We're going to take the put side, which is, and I'm moving the put side down to, I like the 26, the 26.25 actually for the puts because I'm kind of a little risk averse, or 26.24. So you get a 55-cent credit for a probability of success around 70%. So it's almost like it's getting to be almost a strangle probability range, but it's still defined risk. So 55 cents, your max loss is 145.
I think that's a good trade. Just give yourself a little more room in case the VIX does start really dragging in the next month. Just due to the contango effect on that ETF and all that.
All right, so I think we're gonna look at. I think I want to look at just two more stocks. I want to look at JCPenney and SLW. You all right with that? JCPenney, SLW?
Yeah, those are both stocks I'm familiar with.
Or GDX is a good one if you prefer to trade the major markets, but you could just set it up for the viewers. You could just set it up around the same probabilities if you want to do it that way. All right, then let me just move this in just a little bit. I have another computer screen right there, so don't mind that. Okay, so I'm gonna switch screens here, and then we're gonna go over here. All right. So SLW. So SLW is actually, I have a position here, which technically I am a little bit short. So I like this uptrend, and if you're a trend trader, this is a trend trade because, you know, we're reaching these high levels. We start gapping down from this area in here and fell down hard. So I guess you could consider it a trend trade if you're a technical trader. However, I'm not, so I really don't care. So we'll just take a look what we can do in here. Alright, so first of all, since we had so many strikes to deal with in UVXY, I'm just immediately going down to 14 strikes in SLW. So Josh, what are you thinking here? We have high implied volatility, if I'm correct. Implied volatility in the 72nd percentile. That means, and we're also quite a bit on the stock. So, could we sell? Do you like the selling wide call spread, like 2 strikes or 3 strikes wide?
That would be my play for this stock.
Okay.
Absolutely, definitely to the downside.
Or what we could do is we could do a bearish iron condor, but since the stock is kind of a small stock, there's not a whole lot of room to make it really, really bearish. So I'm not so sure. We couldn't do like a calendar or a diagonal because we would want vol expansion. Hopefully we want a vol contraction almost, but it would be okay for vol to expand and the stock to fall even when we're selling premium because we can get decent premium anyway. So then just sell vertical spread, I guess. That was quick and easy, selling the 27.25s. No, 27.30, 29. So let me get to 29. Okay, so 68-cent credit. Your max loss is 132. That is about that should be about 66% probability of success.
Correct.
Yeah. So do you like that?
I do. Because gold's just been on a tear, and so the miners have fallen right there with it. I definitely would play this to the short side, and I think the short call spread's the way to go.
Alright, so short call spread. I already have a position like this on. Next stock, since that was so short, WLT. So WLT down. Ooh, that was good for me. So down 5% today, but that's not a huge move for the stock. Another trend, if you want to say it that way, and I want to short the stock. However, here's something weird. There's these half strikes in the middle of WLT because of some reverse split or something they had in here. So what are you thinking? Considering WLT, do you want to play it to the downside or?
We're talking Walter Energy.
Yes, right? Yes, we are. And I'm just picking random stocks that have high implied volatility. I don't even really care about. However, implied volatility is right in between. It's at the 50th percentile because of this little up move. And it is 90%.
I think it definitely, we could see it fall down a couple dollars. I play this on the bear side as well.
All right, so
I'm showing for an IV at 50%.
Well, the IV percentile is 50%.
Okay. Yeah, implied volatility 90%.
Yes. So there's these half strikes, so we can't get too wide, obviously, but we wouldn't need to. So I'm thinking just a 14-16.
14-15 call spread?
14-16. But I haven't checked the actual. No, it's not enough credit, so we'll have to go to 14-15. But that's not much credit either. So
no, it's not.
So we're not going to be able to do that. And if some of you guys are wondering why I don't plan the trades out before, the reason for me not planning the trades out before is because I want to show you the logic behind the trades. I want you guys to understand. I want you guys to understand what goes behind the trades and what we look at, considering quantitative analysis. Now, I have different studies that, or historical quantitative things that I've set up, telling me to buy or sell stocks, but actually, it really doesn't matter. You can use anything. You can use voodoo. From our perspective, as long as you're following the mechanics. Now, people say, well, strategic trading, well, you should have macro analysis and technical analysis and fundamental analysis. But, again, it doesn't really matter because I would say most of the markets are random. Now, there may be certain things about the markets that are not random. However, there's certain trend plays and just taking advantage of swings in the market and swings in market sentiment. So, is just kind of my play. There's no real big need for lots of analysis. So, I just want to show you this trade is a no-go. And last trade before we close up the show that I'm looking at is JCPenney. As you guys know, I'm stuck in a position here, but there's really some interesting play to sell some puts in this stock. Or sell put spreads. So this is just a fake position we have in on the a fake position we have in here. However, I like the upside, so covered stock or short put. Would you agree with that, or would you just prefer to be smaller than that?
I like that play.
Okay,
so especially for an IRA or something to that effect, where that's basically all you can do. Covered stock or covered puts are the way to go.
So
not covered puts, but cash secured puts.
It's going to take $230 in buying power in a margin account. But for an IRA, it's going to take up $1,177, which is interesting. So if you don't want to get that big, what you can do is you can sell a wide put spread. So selling, say, the 13, and then you go deep and wide, and then you get sell deep and wide, and then you have to be careful about losing these. Like 4 strikes wide is a good one for emulating a short put. 98-cent credit, which is just about, it's just around where it's right in between the 13 and 12 short put. And 98-cent credit, your max loss is 302. If you want to know your probability of success on that, you take You take your max loss and divide by the width of the strikes, which is 4. So your probability of success is around 75%. Do you like that, Josh?
What strikes are you looking at?
The 13-9.
The 13-9.
To emulate a short put. In your break even, you need the stock to fall $1.38 until you start losing money by expiration.
I like to play, especially if you're
a smaller account.
Bullish on it.
All right.
It's a risk trade, but I think it does have a decent probability of success.
For me, I'm short. I'm short a 2 strike wide, or something of the sort, and then I'm short a 1 strike wide also. So I have quite a large position in it. I'm very bullish in the stock. Not huge considering my size. It's probably less than 3% of my account, but that's larger than the average will get. So I like the trade. So we're gonna have to wrap up pretty quickly. I have a live audience here, and I probably have to attend to them because I've been sitting here for a while, and he is a friend. So I have to deal with my live audience and be nice to them. So I gotta go, and I need to find the disclaimer here. Oh, here we go. So I gotta go, guys. It was awesome having you on, Josh, talking about some trades and different things. I enjoyed having you on, so thank you for coming.
It's great to be here, Alex. Thanks for having me on.
Thanks, Josh. Okay, thank you guys for listening. I hope you enjoyed this broadcast.